General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. Got a couple alerts to trigger. Okay. Cool. All right. So logs. Today's Thursday, February 6th, 2025. Do this. There we go. What happened today? Okay, so this is target hit. I said yesterday if we come up here without retracing first, then I'm gonna look for sales. Now I'm thinking TGIF, which kind of makes sense. And we had, I guess you could say this is a down day, but it's really up day. We closed and open here. Open, went down, closed. Open, went down, closed up here. Consolidated all day. This makes me think expansion too. Like take previous week's high and die. Did I get the link or did I get the picture? TGIF just makes sense because we pushed up so much. But after consolidation, you got to expect expansion. You can't really expect retracement, even though it's giving the AMD vibe. Target hit. Let's go to the weekly. We almost filled this, which is interesting. Make this yellow or something so it's different. Oh, then, yeah, it's too bright now. Trading View spoils you because when you get on a different trading platform, you be like, how I stretched this. Trading View is probably hands down the best, or anything that mimics Trading View. They should pay me for advertising. Okay. We almost filled the gap. What's the new week opening gap? From last week. It does make sense. sense to feel it. But I think it makes more sense to retrace and create a wick. TGIF vibes. And return to EQ of the weekly range, the weekly billing range. So let me tag this, because can I put the prices on? Right, left. No, it's not giving me an option. That's only on here. I do need the equilibrium one. Apply defaults. Ding. Let's do it like this. No background. Price levels. Right. Text. Weekly billing range. EQ. Okay. Weekly billing range EQ. It does make sense to do that because we really is kind of stuck in the range. I don't think we're gonna leave this range on a Friday. It's not logical for a weekly profile. NFP could do it. You don't want to sleep on NFP, but I'm just being real. Get this trend line off. So we're still in this Dylan range. This low, this high, drop down, retrace. If we hit this today, that was my target for the day. This is the gap fill. 2025 open price. I mean, it's all kind of still important here. This is the gap. This is that volume imbalance. We need a down candle here. This is the Monday body that we accumulated in. Swept here. We could take this out. Like, that is interesting to me. Just because it's it failed to take this high. Like, up here and then pushing down makes sense. We got a volume imbalance in here too. Real gappy. This text should be center. Oh, put it bottom and then put it right. Yeah, that works out better. Well, we can make this white. Lots of stuff going on here. Daily order block, touch this. Didn't respect this, so this is not an order block. We still got this candle up in here, but this candle didn't really take no liquidity. You don't want to force anything. So Monday, up day, down day, up day, up day. But we are creating new higher highs. A little higher makes sense. 21,908.50. $21,908.50. Let's see. It's a good target. Let's go to H4. because it don't make sense to target that if we don't return a premium. So don't make sense to target that unless we get a discount run or a sell side liquidity sweep. It makes more sense to let it run higher than reversal or CSD and trade the retracement. TGIF or weekly dealing range EQ. It's a lot of stuff we really could stop at that EQ though, because that's what price be doing a lot of times. So it looks like this weekly dealing range EQ is lined up with something else. With this never got touched, looks like it. H4 fair value gap. Fresh. It's a fresh one. Never got touched. Still cute. This really don't need it. Yeah, we don't need this no more. This one's the inefficiency. So let me change this color to like a yellow or something. Boom. This was that last consolidation area. You would think we would have like market maker model, but nah, it's gap down, push up, gap down, push up. Earnings. And it's around this EQ level like this. So the candle's not blocking you. This is the month of February so far too. First week open here. First week of February. This could be a down month. Seasonality it is as well. So no, it's week 1 of the February cycle. Could this be Judas for the month? Seasonality says January through February is low of the year. Ideal places to buy would be under the lowest low of 2025. Somewhere where there's fear. Target remains the same. At 21, 908, 50. Nothing is saying sell yet. Go to H1. And tomorrow's NFP. This inversion gap, this fill, kind of feel like that's over with. This is where this fill last week. This is gap fill. That's that fresh FEG from there. If we get down here, sure. Let me take this off. Let me find this line. Oh, this is the line. Cool. That's perfect. Okay, so if we come down here, it makes sense to take a trade. But if not, it makes sense to wait for here. This is previous week's high. Top, yeah. And swept previous week's high. Okay, down here, up there, up here, TGIF. TGIF would be, hold on, let's do this. %30. TGIF would be right here. And 21, 5, 9950. 21, 5, 9950. We can take this off. Make this gold. Okay, that's a TGIF target. Okay, so we got our killing grounds. This don't matter. We can go here. We want to see what's left of this, just in case we go up here. Look at this weekly. This is a large range week. Very large range week. NFP tomorrow. Waiting for a sweep of liquidity. Ideal trade would be it would be to buy retracement. If we run highs first, looking for a sell. Target is 21, 908, 50. All right, that's that on that. Add this to the Telegram journal. All right, y'all. Y'all have a good day. Peace.